one of the things that made this trading session, and one of the things you can recognize pretty early within a trading session, is whether or not the normal ranges for the clearing are in play. So clearing range clues is really what I'm talking about here. And what do I mean by that? Clearing range clues. So the price action in the first 30 minutes after the bell. Right? The first 30 minutes after the bell will set the tone oftentimes for volatility. Will set the tone for breakouts and follow through and for risk, right? Today's range was very narrow. Now, how do we know that? Today's range was really narrow because we knew that by 10 a.m., the high to low, which we used this handy dandy little free tool right up in here to measure, we know that this range was narrow. Now, the only way you're going to know this range is narrow is, and no disrespect to an ATR, but you're not going to know with an ATR. It can't help you because an ATR is maybe going back 7, 14, maybe 21 periods, right? You're only going to know this with historical price movement ranges. And so that takes us back to data that I use from AutoChartist. So if we pull up the typical price movement range for this specific hour of the day, that's 9 to 10 a.m. Eastern, which of course includes our 9:30 to 10 clearing. Now you'll notice that on that chart, I think we had 5.5 points for the opening range, where minimally I should be somewhere around 13 points. That's the low end of this range right here. So I know in order to compensate or in order to understand better what the market's capable of doing, I need to factor in an additional 8 points, meaning I would look to a lower low by another 8 points. I would subtract that from the low to understand where this market could go. Right? That's one thing that makes it challenging because the market's really not behaving in a normal way. The sooner you can determine, and in this case, we're talking by 10 a.m., the sooner that you can determine that this is not normal, the better off you are. Now, the last thing I want to make sure that I reiterate here, and that is study the first 30 minutes of the morning. But the other thing is, look, I still want to be long for the most part. That doesn't mean that the whole day it's going to grind higher. It simply means that my bias during the first 2 hours of the morning, which takes me from 9:30 to 11:30, my bias for the first 2 hours of the morning is going to be to the long side. I will prefer to focus on lows or corrections or oversold levels for a little bit of movement higher. Not on shorts. Now you might say, Rod, well, why not? Look at all this. I don't play the afternoon, gang. This is perfectly fine, but I don't play the afternoon. And if I take a look at why throughout the year I've been able to handle the volatility and so forth and play the higher probability trade. Let's look at what we've done since the 3rd of November, gang. Has it been better to be long or has it been better to be short? I mean, you can see clearly it's been better to be long. So we're playing probabilities. Those probabilities are better, 9:30 to 11:30. That's number one. And those probabilities are better when we're above the 10-day rolling and the VWAP that's anchored to the first of the month, okay? And when we have double green. So yes, will there be days where the market may not go that high, but then it might sell off or just be volatile? Absolutely, but we're playing probabilities. We're playing 20 trading days per month, and we want to be right for a large percentage of them. It doesn't mean we'll be right for every one of them. But if you think about the way the market's moved, the long side has been the high probability side. And again, the clearing range clues give you an idea to, oh, you know what? This may not be sort of a normal day. All right, so keep that in mind. By 10 a.m., what do you know about the market?